Hey, this is Mark the Meerkat with Grok Trade with the trade of the day. And today's trade was on AI. It was all about a high base. Let's take a look at it here. After opening, it was running up and nice and gentle, up and up and up. But even though the market was falling, and then it was high basing up here, right at 33.60. Why there? Just because it is. And so it's sitting there for a long time, for like 15-20 minutes. So I set a trade up here ready to go long. If it broke out above this 33.60, I wanted to get in. So I have a trade sitting there. Let's see what happened next here. And nope, didn't go that time. And then boom, it went up and it just pierced up and I got in at 33.64. I'm long on AI. Now I have a 1% attached stop automatically right there, and that would be at around 1330, 1331 here. So that's where 1%, as soon as that get activated, I have a 1% attached stop to manage my risk. Okay, here we go. So let's take a look here next, and look at that. It didn't go anywhere for a long time. So again, from here to here, it was just sitting there and waiting and waiting and waiting. Alrighty, so I'm thinking about taking out half here, just because my rules say if it stalls at my line of resistance, which is now at 33.70, I want to get out of there. So if you want to know more about what a high base is, go to freeonlinetradingeducation.com, freeonlinetradingeducation.com, to our free chart school. Just hit chart school right there, and here are the different trading patterns that we trade in the Grok day trading chat room, and here they are right there. So this is called a high base. So we're going to click on high base, and then here's a description of it where it's up here and it's running for a while. And what we like to see is also lower volume as it's doing that, because people aren't rushing to sell. And then you can read the description about here and how to use it. And then when it breaks out from there, we want to be in. So it initially broke out just enough to get me in, and now it's still high basing here, but we still have a possible breakout here from this situation. So here's an example one. It was high base here and then broke out, and this one here was high basing here and then broke out, and there was one down here as well. So again, these happen to be daily charts, but it happens on daily charts or 1 minute charts like mine is right here. But let's take a look here next at I'm sitting here, and I'm going to reduce my risk here now. I'm going to bring it up here just under the 33.50, and now acting as support area, and the 20 moving averages there, everything else. So I have now less than 1% at risk in my trade. And let's see what goes next. Boom, there, look, it goes. Now it's breaking out here. Beautiful. And starting to break out here. It's working its way up here. And then right here just at the 34 even dollar area, starting to stall right here. And look at the volume when it broke out. Look at that volume. Isn't that cool? And then we got my stop here. I'm going to bring it up here underneath this at 33.76 area, under the 8 EMA, under this R2 pivot line, under the 34 even dollar amount. 3 shields to protect my stop there, and that's in the money, risk-free trade. And let's see where it goes from here. It stalled here for a few minutes, so I went ahead and I took out half. My rule says if it stalls at a line of strong support or resistance like 34 even dollar, I'm going to take out half. So I took out half at 34.07 for 1.3% on that first half. And look, the volume is still very high here. All right, so then after I did that, which was slightly in the money here, I'm going to move it up a little bit more here, and let's see what happens after that. Is it going to base here? Is it going to fall back? Oh no, boom, it broke out again. And look, huge volume when it broke out up here to 34.50 is acting as resistance now. I'm bringing my stop up here to about 34.26 here. 34.26 is my stop. It's basing here at 34.50 as resistance, and with really big volume up there. Let's see what happens next here. And okay, bam, bam, bam. Look at that. That pulled back by 1.5% in 2 minutes here. It pierced out, new high, and then dropped. We call this capitulation. What happened was it suddenly surged up, and look at the volume, the biggest volume bar of the entire day. And everybody who wanted to get in got in, and then they started to sell off, right, just like that, with also another big volume bar on the sell side. So that's called capitulation to the upside. It reversed. It's a reversal. It can happen to the downside as well. But it stopped me out, and my fill on my stop was at 34.22 for 1.7% on the second half. So let's quickly look at this whole trade. It was high basing. It broke out just enough to get me in. It followed my rules, and then I just had to sit there for the next 10 minutes or so and wait. Then when it started to take off, the volume started to increase. This was good news, but it stalled at even 34. I took out half. It went up here, a new high of day at 34.50, high base, pierced out and then reversed on me, and got out the second half. So this total trade was for 1.5% in 20 minutes. Hoo-ah. Now this was just one of 7 trades we made today, and here's our trading log from today. Again, I started out, this is the number 7 trade, the one I just showed you here on AI, and then I did have a 2.7% trade, and then I call that a double. Then I had a single here on NU, and then this 1.5 here. And then the market got real choppy after opening, where things were snapping back, 2-3% sometimes, and stopping me out before I could get my stop in the money. So it was I was 4 out of 7 here for 57% success rate, under our 60% target, but our actual reward risk ratio here was 4.47 to 1, which means my average income trade was 4.4 times larger than my average expense trade today. And because even though I was below my 60 here, we were able to get 4.8%, almost to our 5% target for the day. Well, because of this, it's a combination of your success rate and your actual reward risk ratio that can determine what your bottom line can be. And for the week here, we're real strong here. Only traded 3 days so far, and we're at 53% success rate, which is low, below our 60% we want. But with that 4.41 actual reward risk ratio average for the week here, we are already at 25% net for the week, which is our weekly target. That's 5% per day times 5. Now that's not of your portfolio, that's of whatever lot size you're trading. We just deal in percentages in the chat room. We have what we call a model portfolio. If you trade $10,000 per trade, then and you have a 1% attached stop, you have at risk $100 per trade. But for every 1% you net, in this case 25%, for each 1% it's $100. So far we're about $2,500 in the green for 3 days of trading 2 hours every morning, and we still have 2 more days to trade. Don't know if we'll make money tomorrow. It's not guaranteed by any means, or we'll have a really good day. It's unknown. Every day is a separate and unique event. Now, if you like to trade the Grok trade way, I'm going to challenge you this holiday week. I want you to go to groktrade.com, and look under Training Mentor. Are you just winging it out there? Are you just winging it out there? I know I was for a long time, until I went to my mentorship. That changed everything. I was now making educated trading decisions, not just winging it, trying to find something that might work. So if you're interested at all in what our mentorship is, you can read about it. This is the challenge. Read this whole page. There's a lot of information here about what our mentoring program is. In a nutshell, we start out with 3 concentrated days of training. 3 concentrated trades, so you have the knowledge that you need. But that's only a beginning. That's just the tip of the iceberg. What you really need is someone to mentor you, to stand beside you as you implement that new knowledge into your trading system, and that you make educated trading decisions. But we're there to coach you along the way. So again, you can read all about it here. There's lots to read about it. There's even a quick test to take to see if you qualify here, to see if you are knowledgeable in trading, or maybe there's some things missing there it's hampering you from your success. Now we're having the 3-day intensive training, which starts off your mentoring here. Again, look at all this there is to read about it. So there's tons here. This is my challenge over this holiday week coming up. Go ahead and read about that. Now on January 15, 16, and 17, that's a Saturday, Sunday, and a Monday, we're going to do the 3 days of intensive training. But you need to prepare for that. So now is the time to sign up, or at least talk about it. Now in the middle of all this information, way back up here, right here, here it is. Schedule your discovery call. Now this is a discovery call. We're just going to talk to you about trading and where you might be having some issues, and whether or not our mentoring program might be of help to you. and you can just fill this out and hit submit, and we'll give you a call and talk to you about your trading and see if there's an opportunity. Sometimes there is, and sometimes there's not, for different people, depending upon where you are with your trading. Hey, this is Mark the Meerkat. I hope you're having a great holiday season here, and looking forward to Christmas next week. And until then, trade well, and may your winners run.